Xylem, ticker XYL on the NYSE, spun off from ITT Corporation in 2011 when ITT divided into three focused companies. Xylem received the water technology business and went public as an independent company dedicated to one mission: solving water.
Today, Xylem moves, measures, treats, and recycles water for customers in over 150 countries. Municipal utilities, industrial facilities, AI data centers, and commercial buildings all rely on Xylem's pumps, sensors, treatment systems, and analytics platforms.
The company built its digital water platform through strategic acquisitions. Census in 2014 for $1.7 billion added smart meters and AMI infrastructure. Pure Technologies added pipeline leak detection. The 2023 Evoqua acquisition for $7.5 billion added advanced wastewater treatment and water reuse at scale.
Matthew Pine became CEO in 2023, succeeding Patrick Decker, a University of Connecticut mechanical engineer who spent 17 years at General Electric, then ran two Xylem business segments as president, then served as COO. He understands the water infrastructure business from engineering to capital allocation.
Revenue splits across four segments: water infrastructure at 40%, applied water at 24%, measurement and control solutions at 20%, and water solutions and services, the Evoqua contribution, at 16%. Total revenue is $8.7 billion.
Adjusted EBITDA margin is 20.8%. Adjusted EPS grew 9%. Organic revenue growth excluding Evoqua was 4.6%. Recurring revenue from services and aftermarket makes up approximately 55% of total sales, providing a stable demand floor.
The water infrastructure replacement cycle is the fundamental secular driver. 180 million Americans drink from water infrastructure averaging 45 years old. The estimated cost of U.S. water infrastructure replacement exceeds $600 billion, a decades-long demand floor for Xylem's entire product portfolio.
The AI data center angle is real and growing. AI training clusters consume 2 to 5 liters of water per kilowatt hour of compute for cooling. Xylem's advanced cooling water treatment systems and smart measurement infrastructure are becoming essential for hyperscalers managing thermal loads at scale.
On the competitive radar, Xylem scores 92 on Digital Water Platform, the highest of any peer. Essential Utilities leads on recurring revenue mix as a regulated utility. Ecolab matches on AI data center exposure, but operates a different service model focused on chemistry rather than infrastructure equipment.
Over 100 million smart meters have been deployed globally through Xylem's Census platform. 30,000 utility customers rely on Xylem measurement and control infrastructure. 6,000 service technicians provide the aftermarket relationship that locks in recurring revenue across long municipal contract cycles.
The Evoqua integration is Pine's primary near-term mandate. The $7.5 billion acquisition was bold. It expanded Xylem's wastewater treatment and water reuse capabilities significantly, but also raised net leverage to 2.6 times EBITDA. Integration synergy delivery is the proof of concept test.
The $1.5 billion share buyback authorization, executed at a 26% discount to utility peer multiples, signals that management has high conviction the stock is undervalued relative to the quality of the water infrastructure franchise Xylem has assembled.
Xylem moves, measures, treats, and recycles water for 150 countries. And the AI boom has made data center cooling water management one of the fastest-growing problems the company has ever been positioned to solve.
The discount to utility peers with a large buyback is the technical setup. If Evoqua integration synergies deliver on schedule, the re-rating could be one of the more straightforward industrial stories of the year. We dig into the numbers every quarter. Subscribe so you never miss a Charged Alpha deep dive.
Xylem traces its roots to 2011, when ITT Corporation spun out its water technology division as a standalone public company. Today, Xylem is the broadest pure-play water technology platform in the world, serving utilities, industrials, and data centers across more than 150 countries.
The stock hit $118.51 on April 28, 2026, down 4.1% on the day. despite reporting an earnings beat and raising full-year revenue guidance. That divergence between results and market reaction is exactly where the XYL story begins.
The sell-off centered on two concerns. Organic revenue growth came in flat year over year, and the full-year EPS guidance range starts at $5.35, slightly below some consensus models. But those headlines obscure a more nuanced picture inside the business.
This is Charged Alpha's deep dive on Xylem, ticker XYL. We are walking through the Q1 2026 print, the data center water inflection that no one is talking about, the Evoqua integration milestone, and where the valuation sits relative to peers and history.
Xylem operates across four segments. Water infrastructure handles water and wastewater transport, treatment, and testing. Applied Water serves commercial buildings, industrial facilities, and data centers. Measurement and Control Solutions handles smart metering. Water Solutions and Services manages outsourced water contracts.
The global water technology market is a multi-trillion-dollar opportunity driven by aging infrastructure, regulatory compliance, water scarcity, and now a brand new demand driver, artificial intelligence data center cooling. AI is not just a tech sector story, it is creating massive new demand for water infrastructure.
AI data centers require significant water for cooling. At hyperscale, a single facility can consume millions of gallons daily. Xylem's Applied Water and Measurement and Control Solutions segments sit directly in that demand path, and the Q1 2026 numbers confirm the inflection is real.
Coming into Q1, the market expected Xylem to show organic growth improvement after a mixed 2025. The result, flat organic growth, missed that expectation, even though reported revenue beat estimates. The delta between the headline and the internals is what drove the 4% sell-off.
Q1 2026 results. Adjusted EPS of $1.12 versus consensus of $1.09, a 2.75% beat. Revenue came in at $2.13 billion versus the $2.11 billion estimate, a $20 million beat. GAAP EPS was 79 cents.
Year over year, adjusted EPS grew 9% from $1.03 to $1.12. GAAP EPS improved 14.5% from 69 cents to 79 cents. Revenue grew 2.7% reported but flat on an organic basis, the number the market fixated on.
The organic growth story is nuanced by segment. Water infrastructure was down 1% organically. Headwinds in China and project timing in treatment. Water Solutions and Services was down 2% organically from project timing and deliberate walkaways in lower-margin treatment contracts.
But Applied Water was the standout. Applied Water serves commercial buildings, industrials, and now data centers. In Q1 2026, Applied Water data center orders alone exceeded the entire full-year 2025 total. That is not incremental growth. That is an inflection point.
CEO Matthew Pine highlighted data center as Applied Water's strongest demand driver, with multiple large orders from hyperscalers requiring precision water management for liquid cooling systems. The book-to-bill ratio in Applied Water was well above 1.0 times, signaling growing backlog ahead of H2 shipments.
Measurement and Control Solutions saw orders grow 15% year over year. Smart meter projects are accelerating as utilities modernize infrastructure under the Bipartisan Infrastructure Law and EPA regulatory timelines. MCS is the digital layer of the Xylem water technology stack.
The biggest headline in Water Solutions and Services was an $850 million outsourced water contract, the largest in Xylem's history. Structure: 75% services, 25% capital. Service delivery begins in 2028, roughly 10% recognized in 2026.
That contract win matters for two reasons. First, it proves that the 2023 Evoqua acquisition, for $7.5 billion, is generating the commercial scale management promised. Second, it validates Xylem's strategic shift toward long-term recurring service revenue over one-time equipment sales.
On the Evoqua integration, as of Q1 2026, it is effectively complete, 18 months ahead of schedule. That is a remarkable achievement for a $7 billion deal. The new Water Solutions and Services segment has consolidated legacy Evoqua with Xylem's service businesses into a unified go-to-market structure.
Adjusted EBITDA margin came in at 20.6%, 20 basis points above Q1 2025. GAAP operating margin held at 11.5%. The gap between adjusted and GAAP reflects Evoqua acquisition amortization, which diminishes over time as the amortization clock runs down.
Free cash flow in Q1 was $18 million, compared to negative $38 million in Q1 2025, a $56 million improvement for a seasonally weak quarter. Full-year FCF margin guidance is 10.2 to 11%, implying approximately $980 million in free cash flow at the revenue midpoint.
Capital allocation was aggressive. Xylem repurchased $581 million of stock, 4.8 million shares, the largest single-quarter buyback in company history. The board authorized a new $1.5 billion program. The dividend was raised 8% to 43 cents per quarter.
On China, management acknowledged a slower-than-expected recovery in Chinese municipal water spending. China represents roughly 10% of Xylem's total revenue, and order trends there remained soft in Q1. A recovery in China water investment would be incremental upside to current full-year estimates.
On the forward EPS projection, management reaffirmed the full-year 2026 adjusted EPS range of $5.35 to $5.60, with a midpoint of $5.47. Q2 guidance is $1.31 to $1.36. Long-term, management targets EBITDA margin expansion toward 22 to 23% as data center and services scale.
The full-year revenue guidance was raised from $9.1 to $9.2 billion to $9.2 to $9.3 billion. That raise on revenue, while keeping EPS guidance range intact, reflects planned investment in organic growth and technology. FCF guidance of 10 to 11% is the highest in combined company history.
Segment expectations for H2 2026 tilt toward acceleration. Applied Water Data Center Q1 wins begin materializing in shipments through Q3 and Q4. MCS smart meter projects have defined timelines tied to utility capital programs. WSS infrastructure investment ahead of the record contract delivery accelerates in H2.
Balance sheet: approximately $1.5 billion in cash against $1.4 billion in long-term debt, a slight net cash position. After the $581 million in buybacks, net debt to adjusted EBITDA is approximately 0.6 times, still within the target range of 0.5 to 1 times.
CEO Matthew Pine took the helm in January 2024 after serving as Chief Operating Officer. His first full year leading the combined Xylem Evoqua entity showed operational discipline, integration ahead of schedule, record contract wins, and capital returns at pace. The data center inflection was his strongest growth catalyst announcement to date.
Deeper on the financials. Revenue of $2.13 billion was driven by 4 segments: Water Infrastructure at $603 million, Applied Water at $448 million, Water Solutions and Services at $566 million, and Measurement and Control Solutions rounding out the total.
Gross margin came in at approximately 40%, reflecting Xylem's mix of proprietary technology products, smart metering software subscriptions, and long-term service contracts. Water technology companies command higher gross margins than pure industrial machinery due to IP-rich sensors and data analytics embedded in solutions.
GAAP operating income was $245 million on $2.13 billion in revenue, an 11.5% margin. Adjusted EBITDA was $437 million, 20.6%. The 9-point gap between GAAP and adjusted is primarily Evoqua intangible amortization, which runs down over time.
GAAP net income was approximately $124 million, about 79 cents per share. Adjusted net income, adding back amortization and restructuring, was approximately $176 million, $1.12 per share on the diluted share count of roughly 157 million.
Operating cash flow for Q1 was $108 million against capital expenditures of $90 million, yielding $18 million in free cash flow. The heavy CapEx includes WSS infrastructure build-out ahead of contract delivery timelines. FCF improves materially in H2 as those investments cycle through and revenue shipments accelerate.
Looking at the income statement waterfall, $2.13 billion in revenue minus approximately $1.2 $1.28 billion in cost of goods, yields gross profit of $852 million, a 40% gross margin. After operating expenses of $507 million and D&A of $90 million, GAAP operating income is $245 million.
Interest expense is modest at approximately $20 million per quarter, given the near net cash balance sheet. After taxes at roughly 24%, GAAP net income lands at $124 million. Annualized, that implies a GAAP price-to-earnings ratio of roughly 37 times high, which is why analysts focus on the adjusted 21.7 times forward PE.
The adjusted forward PE of 20.7 times compares to Xylem's historical range of 20 to 28 times. At the low end of that range, on a modest post-earnings pullback, Xylem is priced for the current growth rate, not for the data center scenario playing out in Applied Water order books.
EV to EBITDA, with a market cap near $18.6 billion, near flat net debt, and trailing EBITDA of approximately $1.7 billion, EV to EBITDA is roughly 11 times. The sector typically commands 12 to 15 times during growth phases, suggesting Xylem is pricing in below-average growth expectations relative to its own history.
The return of capital story is strong. Year to date, Xylem returned over $600 million in combined buybacks and dividends against an $18.6 billion market cap. That is approximately 3.5% annualized capital return on market cap alone before any stock price appreciation.
When you look at how Xylem stacks up against rivals including Pentair, IDEX Corporation, and American Water Works, the valuation picture tells a nuanced story, where Xylem is competitively priced for its current growth rate but holds re-rating potential if the data center momentum accelerates through the back half of 2026.
Pentair is Xylem's closest comparable, a pure-play water technology company with segments in pool technology, flow control, and water filtration. Pentair trades near 22 times forward earnings on a $12 billion market cap. Pentair's pool business commands a premium for its higher margins and predictable seasonal demand patterns.
IDEX Corporation operates in fluid and metering technology, overlapping with Xylem's MCS segment on precision fluid measurement. IDEX trades at roughly 25 times forward earnings on an $18 billion market cap, commanding a niche premium. IDEX's gross margins exceed 45%, above Xylem's blended 40%.
American Water Works is a regulated water utility, not a manufacturer, but relevant for understanding where investors route water sector capital. At 28 times earnings and 8 times sales, AUK commands the premium investors pay for purely regulated, predictable revenue. Xylem has the technology upside that AUK does not.
The key differentiator between Xylem and industrial peers is the secular demand driver, water scarcity and AI infrastructure. Water is not just a utility input. It is a constrained global resource with increasing investment requirements. The IEA projects water infrastructure spending must double by 2030 to meet climate-resilient standards.
Xylem's positioning within that trend is unique. It provides pumps that move water, sensors that measure it, analytics that optimize it, and outsourced services that manage it. No other public pure play covers the full water technology stack at Xylem's scale, following the Evoqua combination.
On data centers specifically, Xylem competes in cooling water management against large industrials like Vertiv and Eaton. But the water treatment and quality management layer, ensuring water chemistry for precision liquid cooling systems, is where Xylem's chemistry and sensor expertise creates a defensible competitive position.
The AI water demand thesis is not hypothetical. Applied Water Q1 data center orders exceeded all of calendar 2025. If that pace continues, data center could represent 10 to 15% of Applied Water revenue by 2027, a segment that was essentially zero in 2023.
The China risk is real but bounded. China is roughly 10% of total revenue, and the municipal spending slowdown is cyclical, not structural. China's 14th five-year plan targets $350 billion in domestic water infrastructure spending. A recovery in that program would be pure upside to current estimates.
On municipal infrastructure, the bipartisan infrastructure law allocated $55 billion for water and wastewater across 5 years. That funding is beginning to translate into project awards visible in the MCS and water infrastructure order books. The 15% MCS orders growth in Q1 reflects this funding pull-through.
Analyst sentiment is uniformly constructive. 0 sell ratings across all coverage, 12 to 14 buy ratings with an average price target near $153, implying nearly 30% upside from the April 28th close of $118.51.
The post-earnings sell-off to $118 is interesting in that context. Organic growth flat after years of Evoqua integration complexity was the market's reason to take profits after a stock that had run from around $110 to $130 by late March. The fundamentals did not deteriorate on April 28th.
The bull case on Xylem has 4 legs: the AI data center water inflection, the Evoqua synergy runway, the global infrastructure spending tailwind, and the valuation discount to its own history.
Leg 1. The AI inflection. Applied water data center orders in Q1 exceeded full year 2025. If this becomes a sustained trend, and AI CapEx acceleration suggests it will, data center becomes a material growth engine for Applied Water in H2 2026 and scales rapidly through 2027.
Leg 2. Evoqua synergies. The integration is 18 months ahead of schedule. The record $850 million WSS contract demonstrates the combined commercial scale. As Evoqua amortization runs down over the next 3 to 5 years, GAAP margins will converge toward adjusted margins, creating visible earnings per share leverage for patient holders.
Leg 3. Infrastructure spending. U.S. water infrastructure funding is in the early innings of deployment. PFAS regulations are forcing utilities to upgrade treatment systems. The EPA's lead service line replacement mandate creates a multi-year cycle for MCS sensors and water infrastructure equipment. These are non-discretionary compliance drivers.
Leg 4. Valuation at the low end of history. At 21.7 times forward earnings, at the bottom of the 20 to 28 times historical band, and below peers at 22 to 25 times, Xylem's post-earnings sell-off looks like a setup rather than a structural discount.
The bear case centers on organic growth. Flat organic revenue in Q1 despite strong orders in 2 of 4 segments reflects real headwinds in China and project timing. If organic growth does not inflect positive by Q3, the EPS guidance range of $5.35 to $5.60 starts to look like a ceiling, not a floor.
The second bear risk is execution on the record WSS contract. $850 million over a multi-year delivery period introduces revenue recognition complexity. Service delivery begins in 2028, a long lead time where market conditions, technology requirements, or client circumstances could change.
The third risk is data center timing conversion. Applied Water Q1 orders are a leading indicator, not revenue. If hyperscaler build timelines shift right due to permitting, financing, or demand resets, the data center shipment acceleration management signaled for H2 2026 could slip to 2027.
The fourth risk is China recovery timing. If the municipal water investment cycle in China stays soft through year-end, water infrastructure organic growth stays flat to negative, dragging the full year toward the low end of the 2 to 4% organic growth guidance range.
Catalysts. First, Q2 Applied Water organic growth disclosure. If data center orders from Q1 drive Applied Water segment organic growth above 5% in Q2, the AI water inflection is confirmed and analysts begin revising estimates upward. 1 quarter of evidence changes the narrative significantly.
Second catalyst, WSS organic growth turning positive in Q2 or Q3. If the 2 primary organic headwinds from Q1, WSS project timing in China, improve simultaneously, the market reevaluates whether the flat organic growth quarter was a trough or a trend.
Third catalyst, MCS smart meter revenue conversion. The 15% orders growth in Q1 is ahead of delivery schedules. Revenue recognition from those orders flows through Q3 and Q4. If the MCS revenue conversion matches the order trajectory, measurement and control becomes the organic growth engine of the second half.
Let's zoom out. At the full year level, $9.2 to $9.3 billion in revenue, 10 to 11% FCF margin, adjusted EPS of $5.35 to $5.60. That FCF margin implies approximately $980 million in free cash flow, the most in Xylem's history as a combined entity.
Consider the data center scenario quantified. Applied Water is roughly $450 million in quarterly revenue. If data center grows to 15% of that segment, roughly $270 million annually, that is several hundred basis points of organic growth from one end market alone. No acquisition required.
The broader context. McKinsey estimates global water infrastructure investment requirements at $800 billion annually through 2030. Current global spending is about $500 billion. That $300 billion funding gap is what utilities and governments are trying to close with technology. Xylem's full product portfolio addresses exactly that gap.
The stock at 118 is pricing in the organic growth disappointment and China risk. It is not pricing in the data center inflection at scale, the full Evoqua synergy runway, or the MCS metering cycle. That is where the opportunity window exists, between what the market is pricing and what the business can deliver over 12 to 24 months.
The metric to watch: Q2 Applied Water organic growth. If data center orders from Q1 drive segment organic growth above 5% versus flat in Q1, the market re-rates Xylem toward historical multiples of 22 to 25 times. One quarter of data can change the entire narrative for this stock.
There is also a sum of parts lens worth applying. Water infrastructure and Applied Water at 11 to 12 times EBITDA, MCS at 15 times given the digital subscription angle, WSS at 10 times on project-based revenue mix. A simple sum of parts puts fair value in the 145 to 160 range, consistent with the average analyst price target of 153.
The wild card that sum of parts doesn't capture is the data center multiplier. If Applied Water evolves into a recognized AI infrastructure supplier, alongside names like Vertiv and Eaton, water technology re-rates. Investors paying 20 times for water infrastructure may eventually pay 25 times for AI water infrastructure. That re-rating math is why analysts stay bullish.
For informational and educational purposes only, this is not financial advice. Charged Alpha does not hold positions in XYL or any securities discussed. Always consult a licensed financial advisor before making investment decisions. Past performance is not indicative of future results.
That is our full deep dive on Xylem, Q1 2026. More earnings coverage coming all week. Find us on your podcast app, leave us a review if this helped, and we will see you next time on Charged Alpha.
Ooh, we do! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.